Hello everyone. Welcome to Kotak Securities weekly fundamental podcast. This is Rini Mehta. Domestic stock markets corrected last week, reacting to negative global cues. Sensex and Nifty corrected 2% last week, whereas the fall in the BSE midcap and small cap was much sharper. Most of the sectors reported negative returns due to broader weakness in the markets. If we look at foreign investor flows, FIIs continue to be net sellers to the tune of rupees 8,469 crores in December so far. So basically, equity markets witnessed a large increase in volatility as worries emanated from the reported increase in COVID cases in China. While strong US GDP data added belief regarding higher for longer interest rates. On the Indian economy front, the December MPC minutes highlighted a growing divergence among members regarding future rate hikes and their views on growth and inflation. So, going ahead, we expect FII flows to remain volatile. And if we look at the emerging markets, FPI flows so far in December were negative for all emerging markets except for India. India witnessed a marginal inflow to the tune of US dollars 167 million. On the other hand, Indonesia, Philippines, South Korea, Taiwan, and Thailand witnessed outflows. Now, let's move on to some stock ideas. First is Apollo Hospitals. We have a buy rating on the stock with a target of rupees 5,470. Delays in Apollo health companies fundraising as well as elevated competitive intensity for 24/7 have been key investor concerns on Apollo Hospitals. We agree that fundraising in Apollo Healthco is important to ease out the cash drain on the core business. However, given the sturdy free cash flow generation in the hospital and offline pharmacy segments, Apollo Hospital's fundamentals stay strong even without the fundraise. So we maintain buy with unchanged fair value or target of 5,470 as I mentioned earlier. And from the hospital space, Apollo Hospitals and KIMS are our preferred picks. Lastly, our pick of the week is IRB Infra with a target of rupees 340. The company is seeing improving toll collections. Traffic levels across key stretches of IRB are holding up quite well. The EPC arm is better placed than peers on stronger order book despite weak inflows so far from the NHAI. We expect consolidated debt to come down from current levels on debt repayment and new projects being taken under private InVIT. We revise our estimates to bake in improved toll collection across projects. So our revised sum of the parts based fair value or target of 340 also bakes in our valuation of private InVIT projects versus the valuation taken at the time of the GIC deal. We retain buy on the stock. So guys, that's all for today. See you again next week. Thanks for tuning in. Signing off.